Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 7th of November. Starting off with the FTSE 100, which is caught in a bit of a range here around 73.95 to 74.90. Still hoping for a breakthrough 74.90 to take us up to as high as 7700 by the end of this month. On the downside, probably not lower than 73.50. A lot of support there for this market between 72 and 7300. We've tested that several times during the past year, so anything near 7,300 looks as though it's a buy point. Hopefully, as I said, up to 7,700 by the end of this month. If you're looking for another indicator on where we're going, then we want to see the RSI on the right side of neutral 50. It's on the wrong side at the moment at 45, but not too low either. Moving on to the DAX, here you can see that we've had quite a lot of jiggery pokery over the last week or so. We've had a bear trap island reversal, so gap down in October, gap up for November, which is a very strong signal, and above the top of the gap there around 15,000, looking for a retest of the 15,500 area by the end of this month, or hopefully a bit sooner than that. That formation there, the bear trap island reversal, a very strong one of the strongest in charting, so hopefully that will work along with the bullish divergence as well in the RSI window. Moving on to the Dow, and here you can see that this managed to hold on to the two unfilled gaps to the upside, so they remain unfilled, and the support there, 33,900 at the top of the latest gap. Probably one would expect a bit of an overshoot down, say maybe to the 200-day line, 33,800, but just waiting for an end-of-day close through 34,100 really to give us a move up to 35,000 by the end of this month, or hopefully sooner than that. But bullish divergence and the double gap up really can't really get much better than that in terms of the indication of a turnaround for this market. There could be, for some fussy viewers, a line of resistance there from back in August, and that's the one that needs to be cleared. That's the 34,200, so that explains why we've paused a bit after the jump that we've had from below 32,500. Star of the show, which hopefully will remain the star of the show, is Bitcoin, and here just hanging around what was our previous target there, 34,000, and that seemed to be rather ambitious at the time. It looks like a mid-move consolidation ahead of a new move to the upside. That resistance line projection from this time last year heading towards 43,000, which we're still hoping we could see by the end of this month. Obviously, when this market moves, it can really move, and we've already had an unfilled gap to the upside going into the mid-stage of the move and finding support well above old resistance around 32,100, which we had back in July. So things looking pretty set fair for Bitcoin, especially with the golden cross buy signal that we had at the end of last month. On to the stocks, and very good to see that Anglo Asian is back in business in terms of the turnaround that we've seen. Classic bear trap gap reversal, so bear trap from below the September support there at 49 pence, and then gapping up today through the 50-day moving average. That's a classic maneuver, and that should be enough to get the shares up to the line that I'm drawing at the moment, or extending. That's up towards 90 pence by the end of this month. Upside valid certainly while we're above the old resistance on the way down around 65 pence. Maybe you might have to give it down to 60 pence, but this looks like a stock which is in a hurry to go up. We've also got bullish divergence as well, so an uptrend line there from back in July when the shares were much higher, and obviously that still remained higher even when the shares went down to the low 40s. On to Audioboom, where it looks as though some skint traders were trying to sell this morning, but so far the damage limited to basically a rebound, in fact, above the 50-day moving average. That's gone flat now after being on the downside for so long. The other thing to remember is that we haven't been above the 50-day line properly since February, so that's a plus, and finding support above that line emphasizes the potential for a turnaround, a change of trend. The view was and is that at least while we're above that 50-day line, around 158, looking for £2.60. Ideally, we have end-of-day closes above the July resistance line there at 171 now, and that looks like that will be achieved today as well with a hammer candle that we're seeing at the moment. Unfilled gap to the upside off the low and bullish divergence, so that does give Audioboom a proper multi-pronged turnaround technical credential at the moment. Moving on to Galileo, which I think I covered earlier in the week or over the weekend, can't quite remember. We were looking for the shares to hit that resistance line there from December, which they did right on the nose at 1.25 pence, waiting for an end-of-day close above that resistance line to give us a target as high as 1.7 pence, perhaps as soon as the end of this month. And the move higher is backed by bullish divergence. So we had lower lows for the end of October, but higher RSI trace there. Moving on to HeliumOne, where it seems to be still against all the odds, something of a binary bet. Below 6 pence, the market upset with the HeliumOne, and above it, the market would be pleased. Obviously, there was that placing at 6 pence, so again, a few skint traders selling out just to get to break even, and that's why the shares have come down there as well today. The view now is that at least while we're above 5p, we're still looking for 6 pence to break, and then up to 8 pence maybe by the end of this month. But obviously that depends on what's going on in the ground over there in Tanzania. Next stock is one which I've carefully curated over the recent past. Intercede, not exactly the world's most followed stock, but we had a bear trap gap reversal there at the beginning of last month. Another gap higher today. We hit our initial target there around 61 pence, above 61 pence. Looking for 75 pence by the end of this month, and the bullish divergence and the bear trap gap reversal starting the rally there quite nicely. On to Myriad, which has had another decent announcement today with a mysterious US partner, but with a big P as well. Here we've got a rising trend channel in place on the daily chart since July. The floor of the channel there at 1.6. Above 1.6, we're looking for up to 3 pence by the end of next month, by the end of this year. Obviously, the key event here would be to break the 200-day moving average at 2.4 pence, which we haven't done properly for quite a while, actually, back in the summer of 2022. So maybe the first signs here with all these mysterious partnerships that the shares are ready to turn around. On to Novacyt, which I've also been championing here, given the unfilled gap to the upside that we had at the beginning of the month. It was a bear trap island reversal, and as I say, that is one of the strongest charting signals. In fact, there were 2 gaps down and 2 gaps up. So looking very strong here, and basically a break of the initial November resistance of 56 pence could take us up as high as 90 pence by the end of this month, given the pedigree of that turnaround signal. And it looks like a V-shaped bull flag shaping up at the moment. Only back below the 45 pence region now on an end-of-day close basis, really delaying the upside scenario. On to quantum blockchain, and here we've had a bounce off the 200-day moving average and also a gap close buy signal yesterday, so closed above the top of the gap at 1.75 pence. Above 1.75, still looking for 3.6 pence perhaps as soon as the end of this month, given the way that when these shares move, they can really move. Probably all we're waiting for now is a rise in the 200-day line, which is currently flat. The 50-day line is already rising, but above 1.75, feeling chirpy about quantum blockchain. The next stock is Quadrise, which I've been covering quite keenly over the recent past. Again, a bear trap bear trap gap reversal, and here we had the turnaround at the end of last month. Another gap or 2, in fact, in the mix there, and we've hit our target there around 1.4 pence, which in fact 1.4025 was the peak, so that's worked well. Above the 200-day line at 1.27, we're looking for the shares to fill the gap up to 1.8 pence, perhaps as soon as the end of this month. On to Reabold, which finally, when probably most people have thrown in the towel, is starting to turn around. Here we've got a rising trend channel base. Top of that channel there at 0.13. I've said that we could get up to the 200-day line at 0.14. And the upside valid, or the recovery valid, while we hold above the 50-day line at 0.09. So let's see if RBD can deliver the goods. Big news today from Shuka Minerals, where a billionaire, that's a billionaire with a B, has entered or joined the board. Here you can see a rising trend channel there from back in December. We've had multiple support points here at the now rising 200-day moving average, 8.6 pence. So shouldn't be long before we get a break of the 50-day line at 10.25 pence and to go up to 17 pence. One would gather or consider that that could happen by the end of next month or even sooner, but the key here is holding at 8 pence, which is multiple support for the shares. I also covered the next stock, Xeros, recently as well. Was looking for a trend line break there from July, around 2.5 pence. Above 2.5 pence, we're looking for 4 pence as soon as the end of next month or even sooner, backed by that U-shaped turnaround, which looks very strong, bullish divergence, and the unfilled gap to the upside of the lows, which is normally a decent signal. Finishing off with Zanaga, and here we've got a situation where the shares have bounced, a bit like Capital Metals did the other week, off a rising 50-day moving average. That suggests that we're going to have a retest of the October peak around 11.25 pence and maybe fill the gap up to 12.5 pence by the end of this month. Upside valid while we hold above that rising 50-day line currently at 6 pence. That's it for me today. More updates tomorrow.